Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello, Namaskar. You're watching Market Today. I'm Tanya Aneja. Well, this is a show where we'll discuss all the market action, stocks and sectors that are buzzing in and much more. Well, let's do one thing. Let's take a look at the markets and see what the markets are doing at this point in time. And we have actually recovered from the day's low. Remember, the low that we hit on Nifty was of 21,875 and we are trading at 22,183. That's the level. So we have reclaimed that 22,000 important mark. Remember, experts have been saying that 22,000 is an important support level for Nifty. Nifty Bank, however, is down 160 odd points, 46,858. That's the level on Nifty Bank. And remember, we have been discussing banking stocks and Axis Bank is an exception. But apart from that, not much happening in this space. Let's look at some of the gainers and losers for you from today's trading session. It's the IT day today. And of course, the auto space that is buzzing. HCL Tech from the IT space, 1678, that's the level on this particular counter, and Bajaj Auto, Eicher Motors, some of these names from the auto pack doing really well in today's trading session and contributing in the rally that we are seeing. 2.6% uptick there on HCL Tech. Coal India also back in action today, 443 after the downfall that we have seen earlier this week. So 443, that's the level on Coal India. Tech Mahindra also one of the gainers for you from today's trading session. Let's look at the at some of the losers also for you from today's trading session. So some of the oil marketing companies that are not participating, and HDFC Bank that remains under pressure, 1418. That's the level on this counter, 1.5% downtick there. IndusInd Bank also the top loser for you. Sectorally, if you see, it's the metal pack that is doing really well. The auto space is doing well. Remember, we have been discussing auto stocks. We discussed it in the morning trade as well. Metal space also amid softening iron ore prices. This space is also buzzing in today's trading session. But let's do one thing. Let's welcome our market guest on the show today, and we have with us Mr. Sharad Awasthi, who is the head of research at SMIFS. Good afternoon, Mr. Awasthi. Always good to have you on BT TV. Let me start by asking you about your outlook on the markets. It looks like bulls are not really ready to give up, because we have reclaimed that 22,000 important mark on Nifty. And right now we are trading at 22,194. Where do you see markets heading going forward, and what should be the strategy?
Yeah, good afternoon, Tane. So basically, I think in the short to medium term, you might see some volatility, which should be given the type of elections we are scheduled to see across the area. But beyond that, the larger bias should be on the positive side. I don't think valuations are very sky high across the board. They might not be as comfortable as they were maybe 1.5 years back. So right now, you need to be very stock specific and sector specific. A lot of sector rotation would be visible across the board. So I think the broader strategy would be that maybe over the next 3 to 6 months, you might have a roller coaster kind of ride in the market. But these 500,000 point corrections on a 22,000 index, I don't think you should be too perturbed if you are a long-term investor. These are good opportunities that give you opportunities to accumulate some stocks here and there. So I think we have a stock-specific, sector-specific strategy where we are trying to focus on sectors and stocks that offer decent opportunity because of some adverse news or something like that. And then when you try to build your positions on those stocks, and those stocks that are still comfortable in terms of valuations, you can continue to hold on to them. So broadly, in terms of markets, I think over the next 2-3 months, maybe a bit of volatility till the elections. Post-elections, we should be on a gradual up move for the markets, barring we don't have any geopolitical tensions.
Absolutely, got that. And Mr. Avasti, since you were talking about opportunities only, so any stocks that you would like to recommend to our viewers?
Recently, we have been recommending ITC. I think it's corrected a lot. And if you look at the numbers, they've continued to report 15-16% kind of earnings growth. And that is a decent growth. It is one of the cheapest still in comparison to most of the FMCG stocks, which would have even lesser growth. Add to that, again, an aggressive capex cycle in the hotel business. I think that should aid them very well. Even the paper business should do very well. The FMCG business is improving on a daily basis. And I think even on cigarettes, we don't have many issues. So I think most of the businesses should do very well. Right now, because of that bad selling in the stake, there has been a bit of negative sentiment around the stock, which is giving you a very good entry point. And I think you should use that opportunity to create your positions. Even if it conservatively trades around 25-30 times, I think you could be looking at 550, 600 on the stock over a period of time. So it makes decent sense. Frontline stock, you're making decent 30-40, more than that return over a period of next 1.5, 2 years. So I think it's a good bet to have on your side at this point.
Okay, absolutely. 3% uptick there, ITC. The stock is in focus, of course, on the back of the news that the company is eyeing stake in Pratap Snacks. 413 is the level where we are at. Keep an eye out on that. But, auto space is also buzzing today, Mr. Avasi. Bajaj Auto, that is up 3%. Aisha Motors up around 2.6%. M&M, Maruti, all up in the trade today. Any stocks that you would like to recommend from the auto space?
Frontline stocks, I think across the board, the story has played out very nicely over the last 18 to 24 months. And from an absolute rejection to absolute darlings of the market, I think most of the stocks in terms of valuation do not seem to offer much scope from here, unless and until very substantial re-rating happens to the forward numbers, which I don't look at a possibility happening in the near term. So two-wheelers, Hero MotoCorp, Bajaj Auto, TVS has been expensive for quite some time now. In the passenger vehicle space, I think Tata Motors had a stellar run-up, but beyond this, to stretch further would be a bit difficult. Similarly for valuation, similarly for Maruti, M&M, I think most of them have rallied to certain levels from where maybe additional triggers would be required to rally further, which I cannot foresee at this point in time. So I would rather, if I have to bet on the OEMs only, I would rather bet on Ashok Leyland. I think that is a story where you could have another 40-50 bucks to gain. That is one story where I think there is a lot of catch up to play. And as the e-buses orders start rolling in, I think they should be in a sweet spot to benefit out of that. And rather than going for OEMs, I would rather concentrate on the auto ancillaries. Crafts Automation is a company that has corrected a bit, and I think they are offering decent upside from current levels. Similarly, maybe amongst the front lines, Samvardhan Motherson could be a good idea to bet on for targets of around 140, 50. So I think that's a good idea where valuations are not still stretched and there is a possibility that there could be some upside. So on the auto side, Ashok Leyland, and better to bet on the auto ancillary side with stories like Craftsman Automation or a Motherson, Samvardhan Motherson, not Motherson Wiring.
Absolutely, got that, Mr. Avasti. And let's shift our focus to the big boy of the banking space, HDFC Bank, because this bank has been in focus. And we have been discussing this stock. 1418 is the level, 2% downtick there. It remains under pressure only. What would you do with HDFC Bank at these levels?
I would aggressively buy. I think if I were to
Okay.
manage a portfolio, I would put the maximum weightage to this. I think after the SBI rally, most probably HDFC and Kotak remain the sole contenders to be included in your portfolio among the banking space. Even the smaller banks have rallied. HDFC, after the merger, has become one of the largest players. And I think a lot of integration benefits are still to play in the type of branch expansion that they are talking about. Once that starts trickling in, I think there could be a lot of improvement happening in the numbers. And the kind of growth that the synergies can provide, improvement in OPEX and everything, I think that's a huge impetus that the bank will receive. Though right now the sentiment isn't quite positive, but for me, buying ideas when the sentiment is not positive is the best time, because when the sentiment and everything is positive, you won't get HDFC at the valuations you're getting right now. So I think for HDFC Bank, the trigger will be the synergy benefits that start to accrue and the aggressive expansion that they're talking about when that starts to show results. I think over the next 6 to 9 months, you should see that happening. And that should result in a very smart re-rating to start with maybe 1900, 2000. But even beyond that, I'm very optimistic that this is a story that I'm betting on very strong. I think you should be overweight on the stock. Similarly, Kotak also, I think the management changes that they're trying to push in, the change in the business structure and the way the business is running, focusing on Gen Z, that I think that should work very well for them. People are a bit unnerved about the change of guard at the bank. But I think most of it is transitioning in a smooth fashion, and Kotak is a large entity. They have taken care of one of the most important metrics, that is credit cost, over the last 10, 15 years in a very demonstrable way. So I think Kotak is a good bet to bet on with this change happening and the change starting to reflect. So HDFC Bank and Kotak both, I think I'm very bullish over the 1.5, 2 year kind of horizon.
And what about Axis Bank? I'm asking this because this counter is the top gainer from the banking space today.
Even Axis, I think it's not trading at peak valuations. The growth rate should be robust across most banks, and they should not have NPA issues. The only issue is that if some corporate governance issue does come up, that could derail your rally. So for Axis, ICICI, the likes, I think you still have around 10-15% kind of upside. But that's more or less, these stocks are more or less near the peak levels where they could be trading over the next, 1.5, 2 years. So I'm not perceiving much of an upside in stocks like ICICI Bank, Axis Bank from current levels. The market momentum may take them higher, but in terms of valuation, I can't see much upside. At max 10-15% higher from here. So I'm betting more on the contra bets like HDFC or Kotak.
Okay, absolutely, got that. And I think, Mr. Avasti, we'll discuss some of these oil marketing companies as well. A brokerage has initiated, actually retained its sell rating amid worries over their marketing margins. So I'm talking about IOC, BPCL, HPCL. BPCL is in fact one of the top losers also in today's trading session. What are your thoughts on oil marketing companies? Any companies that you prefer at these levels?
No, I think, see, in terms of long-term preference, you could continue to prefer some of them, some of the stocks, the dividend yields, etc., are robust. But the way the assumption has been made, the type of re-rating we have seen across these stocks over the last 1.5, 2 years, it seems to assume a very steady state for oil prices and most of the cracks being very stable, which I seriously doubt, given the underlying demand-supply situation for oil. So I don't think this is going to be very steady, and obviously government intervention is another point that comes into play in India. So all these combined, I don't think this is an industry which you can look at for linear growth. Most of these companies are expected to report flat to stable earnings over the next 2-3 years. They have roughly come down to the median valuations that they have traded at over the last, say, 10, 12 years. So unless and until you look at a re-rating is something that can happen to these stocks in case we see a mad rally the second half of the year. I think that is when you could see more impetus happening to these stocks. But right now, I think it's better to shop at dips gradually across most probably the frontline names HP, BP, IOC. But don't jump in right now. Look at corrections and gradually accumulate them over a period of time. I don't see a runaway rally from here on, and you would get adequate time to add them at much lower levels.
Absolutely, got that. Let's discuss some of the metal counters as well, and let's pull up stocks like NMDC, Nalco, Hindustan Copper. These stocks are doing really well in today's trading session. Hindustan Copper is up around 6.6% as we speak. NMDC up around 3%, and NMDC is, by the way, it has given 95% return in the past 6 months. Nalco is up around 79% in just 6 months. So coming to you, Mr. Avasti, for metal space, I mean, these stocks have delivered phenomenally, really well kind of return in the past 6 months. What would be your advice now at these levels?
I think most of the metal stocks seem to be priced fairly. The one thing that should bother the numbers, particularly for most metal stocks, should be a China not growing at the rate at which it has grown in the past. And as we all know that China is a major producer as well as a consumer of most metals. So when that big market is absent from your total demand supply chain, I can't see a very rapid rally happening in metals across the board. So I think there will not be supply overhangs, but there will not be such humongous demand pulls also for most of the metal stocks. So I'm not very bullish, and I think the valuation wise, if you look at most of the stocks, they are trading at roughly median to the upper end of the valuation band that they usually trade at, and the future growth is not very robust. Plus, in addition, you could have green energy costs that these companies might have to incur in addition to their existing cost base to comply with pollution norms. I think all these should result in some headwinds for the company. And I don't think we have valuation comfort in most metal stocks at these levels. Hindustan Copper is probably trading at most obnoxious levels. I used to like that company, but in terms of value addition and everything, but at these prices, I think it's hard to decipher any kind of upside on these stocks.
Absolutely. And sugar companies are also in focus today, Mr. Avasti, because the government has raised fair price to 340 rupees per quintal. They are in the red today as we speak. So what should one do with these stocks? I mean, should one buy the dip or should one really wait now? I mean, is there more, are we in for some more correction when it comes to the sugar space?
Not typically based on this news because I think the FRP that they have announced is slated to affect later, and most probably the prices at which they are acquiring cane right now is around that level or higher than that price even now. Because market prices and FRPs have always been at a differential over a larger period of time. Combined with that, the type of collection or the extraction ratio that they have mentioned, that is also higher than the national average. So how much of that will qualify for that is also something we would like to see. So I'm not very negative on the basis of this news, but I think when I look at the broader picture, purely as a commodity play, I think even after ethanol, you have 50% of your production that still remains a commodity play, which is sugar basically. And I don't perceive a very bright future for most sugar demand across the world. So that should be a stale point for most companies. If you want to look at it, I think Balrampur with this capex announcement and everything, that could be a good long-term bet because they're diversifying into a new product range and the capex that they've announced is substantial. But then these things will take 1.5, 2 years to start even showing a bit of effect into the broader numbers of the company. So it's better you use the 10-15% kind of dips in these stocks and then accumulate. And Balrampur obviously would be my preferred choice out of the whole sugar basket.
Okay, keep an eye out on Balrampur. And on the other side, Mr. Avasti, these defense, aerospace, these space stocks are buzzing, of course, on the back of this 100% FDI news. We have MTAR, we have BHEL, BEL, data patterns, and then we have Midhani as well. Any stocks that you like from the space or the stocks that are on your radar?
I think as a combination, we have liked most of the stocks, but most of the stocks are now dependent on some re-rating happening to the numbers over the next 1.5 years as the order book swells,
Okay.
maybe a HAL or a BDL. So most of them, I think they're already trading at 25-30 times. And the probability that they get re-rated will be dependent on the order book swelling, say 1.5, 1.6 times. And then obviously that will translate into expected higher revenues and profitability. But I think it will be lumpy in nature, and right now, most probably, we are discounting 1.5, 2 years for most of the stocks. Though BEML with the recent correction after the quarterly results, I think it's a good opportunity to bet on. You get a mix of railways, defense, and infra all combined into one. And the growth rates, probably even without that additional fillip to the order book, should still remain robust. Though with these kind of industries, you should not expect linear quarter-on-quarter kind of movement. There could be lumpiness in the numbers. So if you are willing to look at that way, I think that's a good idea to hold for around 4,000, 4,200. The other idea you could bet on is MTAR. MTAR you spoke just now today, most probably it's up a bit. But I think even after the quarterly results, this is also corrected. We are very bullish on the story. I think the hydrogen electrolyzers, they have a dominant positioning with Bloom. Add to that the other businesses that they're trying to get on. I think biogas and CNG, bio CNG. Those are attractive business propositions for them, and over the next 6 to 7 months, a lot of that should play out for them. They have guided for an aggressive order book accretion over the next 2 to 3 quarters. So I think as you continue to see that kind of order book accretion and a bit of investment starts happening on the clean energy side also, that should give a very big momentum to MTAR also. So we are very bullish on MTAR. We are working with targets of around 2,800, 2,900 on the stock. Even if it trades at say 40, 35, 40 times forward. So MTAR and BEML would be the two ideas I'd like to bet on.
Okay, absolutely. So keep an eye out on these two stocks. But Mr. Avasti, we have been talking about the new age tech space also, whether it's Paytm, Zomato, and in fact the Policy Bazaar stock is also doing pretty well in today's trading session. It is up 4%. Paytm, of course, experts have been saying that is a dangerous bet at this point in time, and Goldman Sachs has also reduced its target price on this particular stock. But Zomato has been doing really well after the third quarter numbers. So what are your thoughts on Paytm, Zomato and Policy Bazaar, and any other stock that you would like to point out from this space?
Mm. See, Paytm, yeah, you rightly mentioned it that it's for the people who want to dare or venture into that kind of risk because we don't know how much problems will come out of the issue. But my take is that in case more problematic issues are not going to come out of the coffin, then most probably Paytm could see a revival from here because what 25 to 30% of the business was coming from Paytm's payment bank. And with that out of the place, I think they will have to find new ventures from where they will cater to that growth. But price correction has already most probably taken that into account. We have corrected what 40, 50% from the highs, recent highs, that is. So I think that has taken care of this issue. Unless and until new issues crop up, I would not be very nervous about Paytm from current prices. But if you are the safe kind of investor who would like to avoid stories which have corporate governance issues or might have shocks in place in future, then maybe you would avoid a Paytm. Zomato or the likes of Nika also, I cannot understand or fathom the valuations that they are trading at. If you are looking at them with a 10-year kind of horizon, that's fine. But 2 to 3 years, I fail to understand how much improvement will happen to the numbers. Though the quarterly numbers have been fantastic, the re-ratings have been fantastic for most of these companies. Uh, the business models are very strong, no doubt about it, whether it's an ICA or a Zomato, they're doing some excellent work on ASA also. But I think when I look at the whole space, when I look at Honasa, I think the type of new products that are yet to contribute, Honasa could be one of the better bets you could bet on. Uh, Zomato seems fairly too overly priced, but that's something I've been saying for the last 60, 70 bucks, and nothing happens, it keeps going up. So maybe I would not be comfortable buying at these valuations, but maybe a Honasa is good, or if you want to stretch your horizon, maybe a Yatra Online could be a good bet on 10-15% kind of dips. Uh, Paytm and Zomato, I think Paytm is for the risk takers. That's okay. You want to sit on it for a longer period of time. Zomato, I would not be comfortable buying at these valuations.
Okay, absolutely. So keep an eye out on these stocks, and of course the space as well. But IT space is also buzzing today, Mr. Avasti. We have HCL Tech, one of the top gainers for you in today's trading session. And I was reading a report. It said that the deals wins during the quarter gone by, it remains strong, and then the attrition rate has dropped, and management also sees pickup in demand from FY25. But I want to understand from you now that what is your opinion when it comes to all the IT names like HCL Tech, TCS, then we have mid cap IT as well, Emphasis, Birlasoft doing pretty well in today's trading session. What would be your top recommendations from the IT space, and what are your thoughts?
Yeah, I think what you're saying regarding the management commentary is pretty much in sync with what we expect. The numbers for most IT companies have been improving, and I think the future outlook will substantially improve even in this quarter's forward guidance that they come out with. The deal wins, etc., should be robust. The US banking segment, BFSI segment, to be precise, is coming out of a rut. And most probably, the fear around the US UK full blown recession are finally receding, and we might be looking at rate cuts happening preferably during the fag end of the first half of this year, calendar year, or during the second half. And that should result in a very strong outlook for most BFSI space. So that should result in a lot of re-rating for these tech stocks. For HCL Tech, I think more or less it's fairly to fully valued for me. I would not like to bet on this more. Infosys, we were betting on, but with this rally, I think we only have around 150, 200 rupee kind of upside left. But LTIM, I think, is one story we would like to bet on. We also advise our clients to buy on it. I think it's a decent story, and with the integration benefits kicking in from the larger merger, both companies have very different capabilities. Merging both should result in a very strong conglomerate. And I think the growth rate should also be much better. They have the first mover advantage on generative AI also. Today, most probably, they have announced a deal win on that side also. So I think LTIM is something I'm betting on for targets of around 6,900. We are expecting very decent growth rates. Uh, Another surprise could be, Tech Mahindra with this new management induction. I think the way they scale up the BFSI segment, Tech Mahindra could be one which could see a lot of surprises. Though at 1327, if you look at current numbers, it looks like fully to fairly valued. But I think the big positive surprises from come in because the BFSI segment is very small in comparison to Infosys. And once they start scaling it up, that should result in a lot of re-rating in the numbers for Tech Mahindra. So Tech Mahindra and LTIM on the larger companies, and on the smaller companies, most probably emphasis should benefit on the rate cycle reversal. They should be one of the biggest beneficiaries. Birla Soft, I'm not comfortable with this kind of valuation. Same for KPIT and the likes. I think I have a bit of stretched valuation. You should accumulate these stocks in a bit of dip. I would prefer a Coforge or a Persistent to add on a dip. And on much smaller companies, I think Mastech could be a good long-term bet. The valuations there seem to be most comfortable, and the growth rate should be steady to much better than most companies.
Okay, absolutely. Got that. So that is the IT sector for you. But Mr. Avasti, ABB India, that is, should be on everyone's radar, I would say. 5,444, that's the level, 9% uptick there. The stock was on a roll yesterday also. A lot of brokerages firms are now bullish because of course, the stellar numbers that the company has posted. What are your thoughts on ABB India? All-time high already done on on this particular counter.
See, I think two, three things play. One is there are no sellers on the counter. I think most people who hold on to it would continue to hold on to it, the larger investors, that is. And the institutions are not willing to sell out. There's very little float available. But in terms of valuations, I think this or cements, they seem a bit stretched to me. I think what is ABB trading at 60, 70 times forward. Uh, so yeah, so I would not be comfortable buying an ABB at these valuations. So 85 times LTM, I think forward numbers growth would be very decent. So it should be trading at around 65, 60 times forward. If I have to buy something and give and play the space, I think L&T offers a much better direction after this correction. It's currently trading at what, 3,200, 3,300, and I think if the forward numbers do come in, I think FY26 should be around $150. And if you put in L&T with 30 kind of multiple, I think you're looking at 4,500. So I think I would be more happy buying an L&T with roughly 40-50% upside from current levels over the next 1.5, 2 years, rather than bet on ABB at 60, 70 times forward, or even a Siemens. So I think within this space, I would be more happy buying an L&T for targets of around 4,500, 4,600.
Okay, absolutely got that. And what a smart recovery we have seen. 22,228, that's the level on Nifty. And before we let you go, just one last question, Mr. Avasti. Any one or two PSU picks that you would like to recommend to our viewers before we let you go?
That's a difficult place to pick one. Very long term, I think Power Grid should continue to do well. And I think with the capex and everything, even Petronet should be in a sweet spot in the long term. So I think both these stocks have 1.5, 2 years fully discounted. So use the dips to accumulate these stories. You get 10-15% cuts across in any of these stocks. I think they are very good long term bets, decent dividend yields, and the type of investment that is going into gasification, LNG and CNG networks, as well as your grid network expansion and renewables. I think both these companies should stand in good stead in the long term.
Okay, absolutely. And on that wonderful note, thank you so much, Mr. Avasti, for sharing those picks with us and being with us here on BT TV.
Thank you.
So with that, ladies and gentlemen, it's now time for us to wrap up. And what a smart recovery we have seen on Nifty, 22,223. That's the level where we are at, 168 points higher there. And Nifty Bank, if you see, that is also down around 77 points. So we have recovered a tad bit over there as well. Bandhan Bank is now the top gainer for you. But if you look at some of the top gainers from the Nifty pack, it's the auto day today. Bajaj Auto, Aisha Motors, some of the top gainers for you. Coal India again back in action, 447, that's the level there. Some of the IT names buzzing in today's trading session. HCL Tech, one of them, 1687, that's the level on this counter, 3% uptick there. And among the losers, we have some of the oil marketing companies such as BPCL and some of the banking names like IndusInd Bank and of course HDFC Bank. But now with that, it's time for me and my team to wrap up this edition of Market Today. But lots more coming up for you only on BT TV. So stay tuned and many thanks for watching.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Today is a very important day for the paints